Hi and welcome to another episode of Fairmont Rainmakers. Today we will talk about Rollups. A Rollup is a business strategy. This business strategy is quite sophisticated, so not everyone knows about it, but there are a lot of investors that use it, and basically it's a strategy that makes a lot of money. Now, a roll-up is a process used by investors where multiple small companies in the same market are acquired and merged. Now, when you buy a company, at Fairmont Rainmakers, we focus on real estate and healthcare roll-ups. So what we do is that we buy car offices or assisted living, and then we are going to merge all these businesses. We acquire, well, at the moment we're acquiring small businesses. I will show you later in this episode how to do due diligence in order to acquire these businesses. And then, I mean, the scale that you can get with a roll-up is quite big, so it's a very, very interesting strategy. Now, why should you do a roll-up? Okay, a roll-up is not for everyone, because, I mean, it's a lot of work. You need to have the great team. You need to have great businesses. Also, the industries, I mean, you shouldn't do it in any industry, because what you are doing is you're buying lots of businesses. And then if you are, I mean, let's say you are before Corona, you decided to do a roll-up in probably gyms, they open again, but even in assisted living, I mean, if you did a roll-up in assisted living, and then your care homes, I mean, went busted, because, I mean, a lot of elderly, they are very delicate. So, I mean, everyone, when we get old, we have less. Well, not everyone, but a lot of people. When people get old, they have less energy, and the defenses are not the same. The immune system is not great. So that's why a lot of old people just pass away because of Corona. So if you had care homes, if you had assisted living deals, probably you lost a lot of money. Okay, the same. Let's say you do a roll up in office space. With Corona, you can lose a lot of money. So you need to know the industries. Okay, you shouldn't get into any industry if you're looking to do a roll up. We do roll-ups with our franchisees and our joint venture partners. So if you are interested in doing a roll-up with us, then watch our free masterclass. We tell you all about what we're doing in it, so you can join, you can contact us, and we can do a roll-up together. However, at the moment, we only do roll-ups in healthcare. We also do deals in real estate, but we don't want to be in too many industries, because we have to focus on the things that we know, okay, at the moment. So we work a lot with doctors and surgeons and people in healthcare to build real estate portfolios with them. And at the moment, in the roll-up that we're doing, we are working with a board in the US. I can tell you some more. In the roll-up that we're doing in the US, mainly we're using SBA loans. So if you know about SBA loans, then yeah, we will be happy to work with you. But let's talk more about what a roll-up is. Okay. So the principal aim of a roll-up is to reduce costs through economies of scale. Okay, so for example, if you buy, so first, to buy a business, okay, if you never bought a business before, probably you don't know what is EBITDA. Okay, EBITDA is the profit of the business, but it has it's an acronym. Sorry, EBITDA is are the earnings before interest, taxes, depreciation, and amortization. Okay, now, so the profits. Okay, now if a business is making $1 million a year, okay, and you want to buy this business, usually, if you look at business brokers, then you can pay between 3 to 5 times the EBITDA. Okay, now if you buy multiple businesses, you can IPO all the group, or you can sell it to a private equity firm, and for probably 10 to 12 times. So it depends on the deals. When we start to a Rollup, and when you start doing any really deal, you need to look at the small deals, and you need to look for deals that are very profitable and with little risk. Okay, because you don't want to buy, I mean, if you're starting, you don't want to buy businesses at 5 times EBITDA, because I mean that's let's say the profit is $1 million, you're buying 5 million, is quite a lot. Okay, so you should buy probably 2 times, 1 or 2 times. That's what we are acquiring at the moment. We're acquiring car offices at 1 to 2 times EBITDA, and we are just rolling the map. We will exit in 7 to 10 years. We'll do an IPO, or we will sell to a private equity firm. However, we're open to other industries. For example, we're doing it in the US, but if you're in the UK, we're very interested in dental practices in the UK, but to do a Rollup in dental practices, you need a dentist. Okay, so you need to joint venture with a dentist, or to have a board with dentists, and then they need to be involved in the Rollup or in the business. So if you're a dentist, we will also be interested in talking to you. Okay, now, when you acquire many companies, okay, you will increase the valuation multiples. Okay, the business can command as it acquires greater scale. So that's quite logic. When you buy many businesses, if you have an admin for 2 different businesses, so you don't need 2 admin people. You just set up one office and put everyone in the same office, because they can do admin for both companies, as long as the industry and the niche is the same. Okay, so you don't need to hire more people. In a way, well, it depends how you see it. You can see it as a sad thing, because, well, you can usually when you acquire businesses and you're doing a Rollup and you're increasing economies of scale, you will have to fire people. Okay, and you need to fire people, and that's the thing. If you need to always be in the right way, in the right side of the money. Okay, what we teach at Fairmont Rainmakers is what like people with money is doing. Rich people invent a lot of things. Okay, if you don't know how the system works, if you don't know how money works, if you don't know how a lot of shit works, you won't make any money. You need to know how the system works, how taxes work, how companies work, how the stock market works. You need to know about sophisticated strategies. If you don't know sophisticated strategies, I mean, you are losing a lot of time and money in your, especially in finance. I mean, sophisticated strategies are so powerful. I mean, imagine you can do in 40 years working 9 to 5. You can make money, but you can make the same money in a month or in a day or in an hour. I mean, it depends what's your strategy. That's why we talk a lot about sophisticated strategies. So, for example, if you buy, let's say you're buying assisted living deals, okay? You get a deal of $1 million, so the price $1 million, and the profit is 500,000, okay? Now, if you buy 5 of those businesses, you will spend 10 million, and your profit will be 5 million. Okay, so it's 2 times EBITDA. If you take this deal that is making 5 million a year, and you could IPO, but it's not that big, so you should just try to sell it to a private equity firm. If you try to sell it, you can get between 4 and 5 times, okay? So 20 to 25 million. You could get more, but if you get 5 times, that's great. You spend 10 million and you made 25 million, okay? Now, to buy these businesses for 10 million, you need to put, using SBA loans, you need to put 10%. So you need to put $1 million to get 25 million. I mean, 25 minus 10, that's 15 million. But you put $1 million and you made 15 million. It takes a lot of work, it takes time, but I mean, in 7 to 10 years, you can make 15 million if you have $1 million. So if you make in 10 years, if you have $1 million, and in 10 years you make 15 million, you're making 15 times your money. Okay, that's a crazy return. I mean, it sounds like a scam, but it's not. I mean, you can check the strategy, Rollups. There's another strategy in businesses, LBOs, leveraged buyouts. If you read King of Capital, then you will know about LBOs. And if you read The King of Capital, you will know a lot of stories. You can also watch the movie Barbarians at the Gate. It's about the LBO that they did with Nabisco. They just, I mean, that deal is amazing. Like, you should watch the movie, and then you will know how LBOs work. Okay, but in that's not the only LBO deal that is great. There are loads of deals that are very, very good. Now, LBOs and Rollups are different strategies, okay? An LBO is a leveraged buyout, okay? We won't talk today much about it. We will talk about Rollups today, okay? But I will just give you one example of LBO, okay? So, this is in the book The King of Capital, okay? Now, always big deals happen between many people, so you need to have a good network, and we at Fairmont Rainmakers, we have a good network, and one of the reasons why we're doing podcasts, and we have email marketing, everything that we do is to increase our network. We don't want to network with anyone. There's a lot of people that we just cannot network with, and we really don't want to network with, but we want to network with business people, with people with the right mindset, and people that want to make a lot of money, and people with big goals as well. So anyway, I will talk to you about this leverage buyout. Gibson greeting cards, okay? They used to publish greeting cards, and they owned the rights to the Garfield the Cat cartoon character. It was an unloved subsidiary of RCA Corporation, the parent of NBC Television Network. When a buyout shop called Westray bought it in January 1982. Okay, this is a long time ago, but that strategy works today. Okay, Westray, which was co-founded by former Nixon and Ford Treasury Secretary William Simon, paid $80 million, but Westray and the car company's management put up just $1 million of that and borrowed the rest. They paid $80 million, okay, but they put $1 million. I mean, if you go to a bank and you're asking for a mortgage for a house, they will tell you, oh yeah, you need to put 25-30% deposit, and the rest we give you a mortgage. Okay. So how did they bought a business for 80 million with 1 million in cash? Okay. Now, if you want to make a lot of money, you don't need to listen to people. Okay, you don't need to listen to anyone. Okay, you just need to do what you know that you can do, and just make money in different ways. You don't need to follow the normal shit. You need to know about different strategies. You don't need to do or listen to what the herd is doing. Okay, you need to listen to people that did these kind of deals. Okay, where, well, there are lots of books you can watch and read on the internet, a lot of shit that you just didn't know that existed. Anyway, with solid oil equity, they didn't have much to lose if the company failed, but they stood to make many times their money if they sold out at a higher price. Okay, so they put $1 million, they bought a company for $80 million. I mean, if you know about LBOs, then you know that that's possible, but if you don't know about LBOs, then this is something new. This is something new, and this is something that is real and exists. Anyway, 16 months later, after selling off Gibson Greetings Real Estate, Westray and the management took the company public in a stock offering that valued it at $290 million. Without leverage, another term for debt, they would have made roughly 3.5 times their money. So if they put $80 million, they made $210 million. Okay, they would have made 3.5 times their money, but with the extraordinary ratio of debt in the original deal, Simon and his Westray partner Raymond Chambers each made more than $65 million on their respective 330,000 investments. So three partners put 333,000 each, and they made $65 million each, a 200-fold profit. Their phenomenal gain instantly became legend. Weeks after, New York Magazine and the New York Times were still dissecting Westray's coup. I mean, I don't know if you think that putting 1 million you can make 210 million. I don't know, but I'm just giving you an example. If you want to check the deal, the deal is Gibson greeting cards. I mean, if you Google RCA Corporation LBO and the Westray deal, you will find it. Okay, but anyway, we're not talking about LBOs, we're talking about Rollups. Okay, now we also do LBOs, but I mean, to do an LBO is quite different. Okay, to find an LBO deal is quite different. At the moment, we're doing Rollups. Okay, if we're interested in talking to doctors, dentists, anyone in the healthcare sector, and we are also looking to joint venture with say people in healthcare, just to scale. Okay. I hope the information that I gave you is useful to you. Okay, just to recap, let's say you buy a business for $1 million, okay, is making 500k profit a year. So you're buying the business at 2 times EBITDA, okay. To buy a business for $1 million in the US with an SBA loan, you need to put 100k down. If you buy 10 businesses, you need to put $1 million down. A 10 million portfolio, you can sell for 20 to 25 million. Okay. If you are looking to do a deal like that, just watch our webinar or send us an email at invest@fairmontrainmakers.com. If you are a doctor or a dentist or you work in the healthcare sector, the same, you can watch our webinar or send us an email. We're interested in talking to you. And if you have any questions, well, in the webinar, at the end of the webinar, you can ask questions as well. And yeah, we can answer any questions that you have. Okay, thanks for your time. We will see you in the next webinar, or sorry, in the next episode.